Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a look at the action in today's session, Wednesday, July 19th, where we saw the major indexes perhaps back off of their highs, but Justin, they did not back down.
Yeah, so in honor of Mike Webster's birthday, he always, referred to the Tom Petty song "Won't Back Down," and that's really what we have with this market. So we'll talk about the trend that we've seen, but with a lot of tech extended, we're going to look at some non-tech names, including Caesars Entertainment, Lululemon, and SLB, formerly known as Schlumberger.
We will do that. And we'll also check in on Netflix and Tesla to see a little bit of the early reaction to their earnings reports. But that's going to be a big topic of discussion on this week's podcast, Justin, with you and Tom Sosnoff of Tasty Live, getting some options action in there for these earnings reports. So that'll be interesting. Looking forward to it.
Absolutely, I am too. We'll just kind of see how to, we're right on the edge of earnings season, and there's a lot of option strategies that you can take to really make some profits during an earnings season where that volatility usually scares people off.
Yes, and that episode will be dropping first thing in the morning tomorrow on Spotify, on Apple Podcasts, and investors.com/podcast. But first, now let's take a look at the major indexes. So the NASDAQ today finishing up just fractionally. The S&P 500 up 0.25%, the Dow up 0.3% today. Small caps outpacing, up about 0.5% by sessions close. So we do have yet another blue day in a row here, finishing just ever so slightly in the positive, Justin. But we've been saying the more and more the NASDAQ runs, the more likely we could see a pullback.
Yeah, but that pullback has not been coming, right? It just keeps on going. If you look at the 5-minute chart, since you have that right there, the intraday, you can see that this was, a lot of back and forth action, for a lot of the day. It came down, a little sharply, was spending some time in negative territory, but then rallied in that last hour. And again, that's just kind of this market just doesn't seem to be able to be held down. And I mean, this was a pretty tight day too. So as much as there was the back and forth action, it really wasn't moving that much. So the the gains are, continuing to pile on. It's really not giving up that much. The last pullback that we had didn't even breach the 21-day moving average line. So we've been, maintaining the Nasdaq Composite above that 21-day moving average line for, like 9 weeks now. That's the longest that we've seen since 2017, which was a very steady market where it just really didn't pull back hardly at all. The indexes, the S&P 500 only pulled back 3.4% at most during that 2017 bull run. So it feels like we're kind of getting into that. And if you look at the weekly chart on the NASDAQ, you can just see how we're just getting week after week of positive action after a little bit of tight action that we saw just under 14,000, which really, I think, allowed it to build a platform and was able to launch from there. And the gains just keep on coming.
Yeah, and we'll have to see
And it
how.
sounds like you're on mute there. There we go.
Am I still on mute?
Nope, you're good now.
And we'll have to see how earnings season impacts the action. A lot of reports coming in later this week. Well, tonight, of course, we mentioned Tesla and Netflix, but the other mega cap tech companies, a lot of them are reporting next week. So we'll have to see the impact on the market there. But we got to hurry up, Justin, and get you to said podcast. So enough of the market chit chat, unless you think there's anything critical to cover there.
Well, we should just real quickly take a look at the Russell 2000 because the small caps are participating a lot more. That was a question mark for a while there when it just seemed like the Russell 2000 was in danger of going back down below its 200-day moving average line after
Mhm.
recovering from the bank failures. A lot of regional banks are in this. A lot of well, and anytime you get credit crunch type things, I mean, that's going to affect the small caps a lot more than these mega caps that are flush with cash. So the fact that this is coming up and very strongly, mind you, is also, I think, worth noting.
Great. And let's take a look now at CZR. This is Caesars Entertainment with a breakout today of 2.4% above average volume. And this is a follow up to a strong move in yesterday's session with the stock gaining over 7%, strong volume as well. So we're starting to see more improvement. This is yet another leisure play. Are we going to see this join the likes of the hotel bookers or the airline stocks? And we've seen a lot of those have big moves over the last couple of weeks or months.
Yeah, it really seems to be broadening out in this leisure space and travel. You got the hotels, the jet, the jet airliners, and the casinos as well. So Caesars doesn't have the Macau, China
Exposure,
type
yeah.
of exposure like an LVS or a Wynn.
Mm.
This is a lot more focused in the U.S., but you can see that this kind of whole pent-up demand for just getting out there and having fun again is potentially something that we could see a big change in the earnings. I mean, look at how you had 2020, I mean, just huge losses, 2021 a little bit less, and 2022 a little bit less. Now 2023, it's estimated to be profitable again, and 2024 a big change in profits.
Mm-hmm.
So this is kind of a turnaround play. So the
Right.
EPS rating, the earnings, they're not going to really be there right now, but what the market is looking at is it's a forward-looking mechanism. So if you think that this, can continue and that these estimates are on par for reality, with a lot of people going back to back to the leisure space, then Caesars Entertainment does kind of get you out of that China risk that LVS and Wynn and MLCO, some of those others have, but still gets you exposure to that space.
Mm-hmm. Now it is about 19% above the 10-week line. So good to keep that in mind, Justin. And regarding the 21-day, 12.5%. So it is getting up there in terms of this momentum and extension above those moving averages.
Yeah, and that's the biggest problem right now is it just, if you're looking to increase your exposure, it just seems like everything is just so extended. And so, although this is kind of the classic cup breakout from that 56.75 entry, I personally would like to wait a little bit. I
Mhm.
always like to wait and see if it kind of forms a handle. Sometimes they don't. Sometimes they just
Mhm.
keep on powering higher. But a handle, I think, right here would be ideal. A little
Right.
bit of a pause, and we're going to be talking about that in almost every single case here.
Yes. And if you don't want to wait, if you want to buy a cup breakout, it had volume, it has that turnaround quality, as you mentioned, Justin. Here's the 5% stop from the breakout. Here's the 8% stop below that buy point. So you can always use a percentage stop if it's getting up there versus the moving averages, if you just can't help yourself.
Right, exactly. And the other thing too is you can size your position. If you feel like you have to give this more room, and 5% just seems like, oh well, it could easily come down there and still not look broken, then you can just do a smaller position size. That's why a lot of times we'll pyramid into something. Start with maybe a half position of what you'd like to get to, and that allows you to kind of get some follow through on it, make some gains, get some feedback from the market before you put more of your hard-earned cash to work.
Now let's go ahead and take a very quick look at Lululemon, Justin, breaking out of a base here, up 1.3% today. Volume wasn't above average, but it was the strongest upside volume in a couple of weeks here. But I will say, this base looks a little erratic to me.
Yeah, we were kind of talking about this on IBD Live. Would you call this a cup? Well, and if so, what kind of cup are you drinking out of?
Yeah, there's a
Yeah,
leaky cup there. I see
yeah,
a
very, very strong move to the downside, but it did get that support at the 200-day moving average line and then really jumped on earnings. And, it was really kind of that earnings that changed the outlook here, changed the valuation. And that can happen a lot of times where you get an earnings report that makes analysts rethink how they're valuing the company. And what I especially like to see is that a company, a stock actually, because it really comes down to the price, that
right.
the valuation is such that people are comfortable with it at that higher price. And that certainly seemed to be the case here. Now, it did hit resistance right there at that 389 level. And if you go back, I mean, let's look at the weekly chart, and it becomes very clear that this level was, pretty important. It goes back quite a ways. You could even say that, right under 400. That goes back all the way to 2020. So this does seem like a very important level here. It did have a little bit of a pause on the daily there. So it's not like it was straight up. Yes, we've been up for the last 4 days on this one, but it did have a little bit of a pause here, a little bit of a handle. And again, right there at that 386, roughly high.
And
And
change, yeah.
so, now that we're getting above this high and kind of clearing that 389 area, we'll see if this can continue. And I especially like your point, Allie. Yes, the volume was below average, but look at it compared to the recent activity, and it really sticks out on how powerful that was comparatively.
Great. Let's also take a look at SLB, oil field services. This is some nice tight action after a strong move.
Yeah, I really like when something can make a strong move, and it's very easy to look back and say, "Oh, I missed it. It's too late." But if it can tighten up like this, that I feel like that's your second chance drawing. So Schlumberger and a lot of the oil field services stocks. If you just real quickly take a look at OIH, which is
Mhm.
a ETF that covers the kind of the field services area. This is the VanEck Oil Services. You can see a very similar pattern here, where it's got this cup shape, but I really like the tight action that SLB has been forming, and that's where you can get a second chance. Now, this does have earnings coming up, so it's earnings season. You just have
Yep.
to be aware of that. Ideally, if we could get this to continue tightening up, earnings could be that catalyst that puts it, over the top. And so I think you can wait for that, see how the earnings come out, and make your determination there. Look, if it just belts out of there and it's too far extended, then you can wait for another pause, because a lot of times after those earnings, you will see it kind of hold the gains, pause a little bit, and then continue higher. But I always like to see that pause, because it gives you, again, a platform from which you're launching from.
Yeah, great. Thanks so much, Justin, and thanks everyone for tuning in. Do want to let everyone know a very important scheduling change for tomorrow's Stock Market Today episode. We're going to be filming a couple hours earlier, so we'll be going live at 11 a.m. Pacific. I guess that's 2 p.m. Eastern. I've made my way out to LA, and the reason for the scheduling change is a number of us are going to a private memorial for IBD founder Bill O'Neill. So we will be remembering him and celebrating him. So thanks for your patience with the scheduling change. We'll see you tomorrow before the close. And of course, we've got IBD Live coming up in the morning. So make sure you tune into that, investors.com/IBD Live for all the details. We'll see you there. Thanks again, and see you tomorrow.